Before we begin, understand this. Nothing you are about to hear is opinion. This market has existed longer than you. It will exist after you, and it does not reward effort. It rewards understanding. Every single day, traders open charts believing price will react for them. But price does not move for traders. Traders move for price. If you stay until the end of this video, you will never see the market the same way again. Not because you learned a strategy, but because you finally understood intent.
90% of traders fail, not because the market is hard, but because they were trained incorrectly. They were taught to memorize formations, to wait for confirmation, to trust lagging indicators. Indicators delay behind price. But institutions don't react to price. They cause it. So while retail traders ask, "What just happened?" smart money asks, "Where is the liquidity?" Smart money is not smarter people. It is larger capital that cannot enter the market emotionally. Banks cannot click buy and hope. They need volume. They need counterparties. And retail traders provide that volume unknowingly. Every stop loss is liquidity. Every breakout entry is permission. This is not manipulation. This is mechanics. The market moves where orders exist.
Structure is not zigzags. Structure reveals who controls price. Lower highs, lower lows. When structure breaks, power shifts. But here's what retail never learns. Structure breaks are not entries. They are invitations for smart money to enter at discount. Chart Authority Labs will guide you efficiently through the nitty-gritties of structure, turning you into an authority wherever structure is concerned. Don't forget to like, subscribe, and follow.
Observe. This candle was not emotional. It was engineered. Retail sees chaos. Institutions see imbalance. Price always returns to rebalance inefficiency. This is where patience is rewarded and impatience is punished. Order blocks are not zones, they are decision points. An order block is a specific price zone on a chart where large institutions, banks, hedge funds, placed significant buy or sell orders, creating an imbalance that often acts as strong future support or resistance, or a reversal point, marked by a consolidation area or the last candle before an impulsive move, before a major price shift. These smart money footprints show where heavy liquidity exists, signaling potential turning points for retail traders to align their entries with institutional activity.
Price does not break highs to continue. Sweep occurs. It breaks highs to collect. Retail breakout buys appear. The breakout is the bait. The reversal is the intention. If you understand liquidity, the market becomes quiet. No chasing, no revenge trades, just waiting. Liquidity engineering and price mechanisms are closely linked, often intersecting in modern, high-speed, or automated financial markets. Liquidity engineering is the active, intentional manipulation of market liquidity, how easily an asset is bought or sold to facilitate large trades with minimal price impact, or conversely, to create price movement. Join us at Chart Authority Labs to decipher engineered liquidity and price mechanism.
Higher time frame bearish trend. Institutions plan on higher time frames. Lower time frame manipulation shown. They execute deception on lower time frames. Liquidity grab. This is why your setup works after you're stopped out. Let it sting. You weren't wrong, you were misaligned. Multi-time frame institutional flow analysis involves tracking smart money, banks or institutions, by aligning higher time frame trends with lower time frame execution, typically utilizing a top-down approach, e.g. daily/4H for trend, 1H/15M for structure, 5M/1M for entry, to trade in sync with institutional bias and liquidity sweeps.
The complete institutional model, full walkthrough. This is the sequence banks repeat. Higher time frame bias, liquidity taken, structure shift, order block tap, displacement confirmation. One setup, one decision, one execution. This is not excitement trading. This is boring consistency. Why discipline matters more than strategy. Traders sitting still. Smart money concepts punish impatience. Missed trades montage, but reward stillness. Capital curve rising slowly. You don't need more trades. You need fewer, better ones.
The market was never random. It was always organized. When you stop reacting, you start anticipating. Think like capital, move like institutions, and let price come to you. Don't forget to subscribe, like, and follow for more. See Chart Authority Labs.